Good morning, guys. Today, we are going to discuss financial statements based on Philippine Accounting Standards number 1. Okay? So, we need to study key concepts of components of financial statement, relationship on components of financial statement, the preparation of the basic financial statement, and to critique and comment on financial statement on different industries. So, we'll start with the key concepts on components of financial statement. So, when we say accounting, it is coined as the language of finance. So, the reason of this is because all factual information are provided through formal reports prepared by accountants. So, these statements present the consequences of business events or transactions, split or classified according to its financial nature. So, according to Philippine Accounting Standard number 1, an accomplished collection of financial statement should include the following. First is we have the balance sheet, okay, or what we know as the statement of financial position. Then we have the income statement, or what we know as the statement of operation. We have the statement of comprehensive income. We have the statement of changes in equity. We have the statement of cash flows. And the last one is the notes to financial statement. Number 2 is we need to study the relationship on components of financial statement. So, under statement of financial position or balance sheet, it presents the company's financial position at a given period. By the way, we can also call it as the statement of financial condition. Using this statement, current and potential creditors and the peer management utilize it in evaluating the company's liquidity, solvency, financial structure, and the capacity for the adaptation. All accounts in the balance sheet are all real accounts. So asset, liabilities, and capital accounts are embedded here. So under a statement of operation, all accounts in the income statement are all nominal accounts. Revenue and expenses are embedded here. So in the provision of the Philippine Accounting Standard number 1, it states that in business, it shall present the income statement by using either functional or natural approach. Okay, so the income statement presents the result of the firm's operation or performance for a given time. A revenue can be either called as sales, a service income, or a revenue itself, while expenses can be called as operating expenses, which is divided into selling and administrative expense. But if the business is a merchandising and manufacturing business, we also need to put up the name of the cost of sales, which is also considered before determining the gross margin and determining the operating expenses. Statement of comprehensive income. So, when we say statement of comprehensive income, it consists of gains and losses that are not included in the income statement but are found in the equity section of a statement of changes in equity. So, the statement of comprehensive income can be presented separately or as an extension of the income statement. So, when the comprehensive income is included in the income statement, heading is no longer used. So, instead, the statement shall be called as a statement of comprehensive income. So, you will slash out the statement of operation because you already have your statement of comprehensive income. Under statement of retained earnings, it discloses the results of current year's operation, which brings about the changes in the company's retained earnings. Okay? So, please take note that this kind of statement is only seldom used. So, mostly, this statement is included in the statement of stockholders' equity. The statement of changes in equity presents the development of changes that occurs in the shareholders' equity. So, the following are presented in the statement. So, we first have the capital balance beginning. We need to add back the result of income. Okay? We have the dividends paid to shareholders, which is deducted to your capital balance. And you need also to add the investment transaction of owners if there is an investment or an additional income that we have. And then after that, we are going to get the amount of the ending balance of capital or equity. Next is we have the statement of cash flows. So this is based on Philippine Accounting Standards number 7. Okay, so the statement of cash flows presents the summary of operation, investing, and financing activities of the firm. So it reconciles the beginning and ending balance of cash and cash equivalent. So the following are presented in the cash flows. So we have the cash balance beginning, so which you can also see it on your balance sheet, beginning balance or January 1 balance. Then we need to add back the net income for this year. Also add back the depreciation that you encountered. Then we need to add back the operating expenses. We need to add back or deduct investing activities. We need to add back or deduct financing activities. And then we end up with the cash balance at the end of the year. Okay? So operating activities, you need to include the current asset and current liabilities transaction. Okay? If there is any differences between the current asset and current liabilities, we need to put it under operating activities. Okay? Any transaction with regards to non-current asset are putted in your investing activities. And any transaction under non-current liabilities are put in the financing activities. And we have the preparation of basic financial statement. So here's the illustration. So first one, we have the financial position or the balance sheet. So we have the composition of our assets, okay, which compose of the current asset, the non-current asset, and the intangible assets. So all in all, we have 3 different accounts and to top up the total assets. By the way, you need to understand that the amount of total assets should be equal to the amount of the total liabilities and capital. Okay? So, under liabilities and capital, we have first the liabilities. So, we have the current liabilities and the non-current liabilities. Add on to get the total amount of the total liabilities. And then we have the capital. So, if the business is only proprietorship, it is put like this one. We have the capital beginning, add the net income. If there is any withdrawal, you deduct the withdrawal in order to get the amount of the capital end. Okay, all in all, total liabilities and add the capital, you will have your total liabilities and capital, which is the same with your total assets. Okay, next illustration is the statement of operation or the income statement. So we have 2 kinds of illustration here. The first one is what we call as the natural approach. Okay? So when we say natural approach, the business is more on service business. Okay? Sales, less operating expenses. So when we say operating, it is divided into selling and administrative expense. So after deducting these 2, sales minus operating expenses, we have your operating income. Okay, it's only operating income because at the bottom, you need to deduct the appropriate amount of the tax that we have before you get the net income. Okay, the ending amount of your net income. Anyway, we will discuss that under your taxation. Okay, next is what we call as the functional approach. So when we say functional, it's more on, if your business is more on merchandising and manufacturing business. So it's functional. Okay? You have your sales minus the cost of sales in order to get the gross profit. Okay? Then after that, you deduct your operating expenses, which are divided into the selling and administrative expense. So after getting the sales minus cost of sales is equals to gross profit minus the expenses, we have the operating income. Next illustration is the statement of comprehensive income. Okay, so it's the same with the income statement, but okay, so this one is a natural approach, but we need to add or deduct at the end of the operating income if there is any gain on sale of property, gain on investment, etc., and or loss on purchase of equipment, etc. These are only examples. So there are lots of gain or loss accounts. Okay, so you need to put that on your statement of comprehensive income. So it's almost the same, but the difference is you put the gain or loss account. Okay? Next is we have the functional approach of the statement of comprehensive income. Again, it's the same with what we discussed, but the difference is you need to add or deduct the gain or loss accounts. And then you end up with your operating income. Illustration is the statement of changes in equity. So you have your stockholders' equity beginning. You add your retained earnings or net income or comprehensive income, whatever it is, and then you deduct if there is any dividends paid in order to have your stockholders' equity at the end of the year. And then you have your statement of cash flows. So you need to have first your cash balance beginning. You add the net income, add back the net income, add back the depreciation, add back the amortization, and then you add or deduct the result on the operating activities, the result on the investing activities, the result on the financing activities. Again, it should be balanced with your statement of financial position. Last part is the critique and comment on financial statement of different industries. Let's start if the business is mostly trading and merchandising business. So these are the businesses that we have when you are using trading and merchandising business. Usually this business is mostly under a sole proprietorship business, because this one is a small business like SMEs or small micro entrepreneurial business. Okay, so for this business, you need to prepare only the statement of financial position, statement of operation, and your statement of cash flows. What if the business is mostly service business like this? Okay, it's also as a small business. So you need to put your service income first as your revenue, and then you deduct all the operating expenses when you are producing your income statement. And then you also prepare your statement of financial position, and you also need to prepare your statement of cash flows. What if the business is mostly professional business like this? Dental clinic, medical clinic, law firm, engineering services. So they also need to prepare an income statement, but sometimes they use an 8% tax for this. So they need not to prepare any transaction for the operating expenses, because their transaction is always based on their earnings, and then they multiplied it by 8%. Anyway, we will tackle it under taxation. What if the business is mostly corporation? Okay, so if the business is a corporation, then all components of financial statement should be prepared in order for you to determine, especially the notes to financial statement, in order for you to prepare the correct deliberation of the financial statement. So this is the end of our lesson. I hope you understand all of our topics. Then after this, we are now ready to prepare financial statement of the company. I hope you learned something from me again. This is Think Tank Like This. Bye-bye guys.